Okay, in this video, I'm going to talk about automobile insurance and introduce that topic a bit. Basically, the idea of automobile insurance is if you're driving, there are various liability risks that are associated with that. And so automobile insurance is designed to address that. But then it also kind of involves some other coverages and things like that in many cases as well. So let's take a look. The first one is going to be coverage as it relates to financial losses related to the property of the insured. So if you're the insured individual and your vehicle is damaged, certain types of coverage may cover some of that damage. So it might help to protect you from financial losses depending on the coverages you've selected. One of the main purposes of automobile insurance is to cover damage to other people's property that you incur or injuries incurred by others. And so basically, if you are driving your car, and in most states, if you cause an accident and it was your fault and they are injured or their car is damaged, then it's your fault. And so as a result of that, the insurance is covering that, at least within certain limits, to help to sort of make that injured party whole due to the damages that you caused. And that brings us to the 100, 300, 100 language in an auto insurance policy. So if it has 100, 300, 100, what that means is the policy will cover up to $100,000 of injury or medical payments per individual, up to $300,000 of injury coverage or medical payments per incident, and up to $100,000 of property damage per incident. So, for instance, if you are driving your car in a state in which the fault of the driver matters, and you hit, and it's your fault, you hit a bus full of people and cause a whole bunch of damage and injuries, and if 10 people are injured at $100,000 each, then it's going to be limited at $100,000 per person, but it's also going to be capped at $300,000 per incident. So there's going to be a lot of people with injuries that the insurance company is not going to pay for. And if a one single person had $200,000 or $300,000 of injuries and medical bills and everything else, then the insurance company is only paying the first 100,000 of that. The final 100 of the 100, 300, 100 kind of quotation of coverages, that final 100 is specifying the property damage coverage. So if you cause up to $100,000 of property damage, then your insurance policy will cover that. So that you might think, well, clearly that would be enough. Well, but it might not, because if you, for instance, cause a multi-car pileup on the highway, you could blow through that $100,000 of damage pretty fast. And as vehicles get progressively more expensive, it starts getting easier and easier to envision scenarios in which you could cause damage that exceeds the $100,000 pretty fast. But you could also incur some pretty substantial property damage if, for instance, you swerved off a road and plowed straight into somebody's living room, for instance, right? And so that could get extremely expensive very fast. So there are ways in which you could easily exceed the $100,000 of property damage coverage, and that would be why there are policies that have higher limits for the injuries incurred by our others coverage, so the sort of the medical payments liability and the personal property liability. Now that does bring up the issue of the fact there are some states in which fault doesn't matter. So for those states, the insurance is required to basically pay and to cover regardless of who the fault lies with. And so in that case, this is where you'd have personal injury protection coverage. And this would cover the insured individual and occupants of the insured's vehicle for personal injuries that were involved. Now, you can also, typically there will be uninsured or underinsured motorist coverage. This is coverage paid for by you that helps to cover some degree of damages to your vehicle and or to your vehicle in the event that the person who causes damage to you wasn't actually adequately insured. And so in that case, basically, you're footing the bill for it, but you're basically paying a little bit of a premium in the event that they don't have the coverage that they're supposed to have. Then that would actually step in to cover some of the damage to your vehicle and things like that. So that's kind of the idea behind the uninsured or underinsured motorist coverage. And of course, in most states, it's illegal to drive without insurance, but there are people who drive without insurance or who are underinsured, and so that's where that kind of coverage could come in handy. Also, claims are often paid in the order settled. So if there is a severe accident involving many people, it actually may make sense for you to try to get things resolved as swiftly as possible in order to ensure that you get paid first. So if it's going to be an accident scenario that's going to probably exceed the insured individual's coverages, the people who kind of agree to a settlement faster may get paid faster because they could get paid through the insurance company before the insurance company has hit its max coverages for the policy. And if you are delaying, then it's possible that the max coverages are hit, and then the insurance company is walking away. And at that point, your alternative would be to basically sue the driver who caused the damage. So there is kind of an incentive there to try to wrap things up in a timely manner if it's going to be something that involves many different individuals or multiple different competing claims, sort of fighting for payments that were to make people whole after some kind of incident. So hopefully this sort of little introduction to sort of some of the components of auto insurance policies has been helpful. And thank you so much for watching. Have a great day.